Right. So um, I'm just gonna do a quick. I mean, I could do a recap, I guess. Today is March 13th, March 18th. Um, it's right now 9:22. Didn't realize it was Friday today. I thought it was Wednesday, for some weird reason. But anyway, today we had a very strong bull trend. This was actually the open here. It's very rare that you actually have the open bang when the trend starts. Normally, this leg always happens in the overnight session, and then we get something like this in the day session. And if you notice, we have like a spike, pullback, channel 1, 2, 3, and it's gone parabolic. A lot of people who I've been speaking to who traded today lost a lot of money. And it's really because of one thing. Everyone is, at least some of the people that I know, trade based on only one idea and one system. And because they use that one system that they rely on, they believe that, and they only see the market from that perspective. And the problem is the market actually is, in my opinion, is just decisions and human decisions. So every time you see a bull bar or a bear bar, there's always a reaction to it. And as a result of that, it causes certain types of, what's it called, reactions. People tend to make their decisions based on that. All right, so this is actually interesting. I wasn't looking at this chart and now seeing this two-legged pull or this wedge bounce off the moving average. I thought that was interesting. Um, yeah, because on the other chart, on the RTA chart, which I was looking at, it actually doesn't do that. Actually, it kind of does, but it goes through it a bit, but it doesn't bounce off it, just like the ETH. The ETH, you actually have a really nice support over here. Okay, so I mean, one looking at this, you could have said, oh, you could have plotted this low, plotted high, got in your channel, and then seen this rejection here. So you have four confirmations of this channel: 1, 2, 3, 4, and in fact, there are quite a few more nested ones in here. That just kind of tells you that, okay, do you know what? You're comfortable just trading this. This would have been tricky though, because we could have had a rejection here. And it looks like some traders actually thought that was going to happen because we're going to a trading range here because this was a wedge top. 1, 2, 3, and then we had that. I actually shorted just below this bar, and then scalped in and out, and then kind of took it down this way. I think I took a few longs here, and I think I was already done with my day at that point. I didn't really enjoy the way I traded because I was losing a bit of money and getting some money, and it was difficult to just focus on the system. Had I just kind of shorted this based on, the fact that this is a wedge top, would have been great, but I don't like shorting when I think we're in a bull trend. I wasn't sure if we're in a trading range. There were a few other issues that, in the way I assessed this, and I think that just really has to do with the fact that I was just not as, I'm going through a period of bad confidence, should I say, maybe that's the word for it. And so seeing this come down here, and then here things just kind of changed. It became, a small pullback bull trend all the way from here, there. This is probably supposed to be the easiest part, but in hindsight, it looks easy because you just see on top, on top, on top of top. But at the time, you don't see that way. You're thinking of trading range. We have rejected here. We're going up here again. Another trading range, rejected, bounced off the moving average, broke out, went even higher. It was just not as easy to trade. I find that trading ranges are easier because you have a defined destination. You know that when you're shorting here, you're heading down here and you're going three legs. When you're on a bull trend, it's difficult because you don't have an exit. You don't know where price is going. Well, you know the direction it's headed, but you don't know what's going to happen next. And I think what I'm finding now with trends is they just keep going until they become trading ranges. And that is the conviction you have to have, that the trend will keep going until it does this. And even if it does this, say you bought the worst price up here, you can still come out, at least for a good price, you can buy again. So you have to trade smaller, use a correct stop, and put that into consideration. but you have to bet that we're in a trend first and be comfortable with the pullbacks. All right, so some quick analysis. I mean, the market has been very clean. If I have to admit, it has been pretty clean. As I look back on everything, it's shown you exactly what it's trying to do. There's nothing that is scary or weird. If you think about it, you've had a nice strong bull trend. We had a wedge top here, and then we had a bear breakout, a very strong bear breakout. This is a daily chart. And then you've had this, probably a bit confusing here, but you know this is what's going to happen. Train range over here. Then you had a breakout, a wedge top, double top, 3 legs down, 1, 2, and then 3. And then also even in that, you could see the formations. You know, a nice bear trend here, bear breakout, 2 legs down or 3 days down, 2 up, which is going to be minor rejection of the moving average. 1, 2, 3, 4 down, went down here, came back up, and you have a wedge top. It's like everything is okay. It's normal. There's nothing strange about anything that's happening in the market. Everything fits. I remember I used to look at this and it was very random once upon a time. And now you have a spike. In fact, this is all still a breakout. And then maybe tomorrow might get the first pullback or might just get a bear bar. We don't know yet. Well, not tomorrow, but Monday. So really trading this should not be difficult. I think what makes it tough is, what makes it really tough and hard is just focusing on the bigger plan and the bigger picture. And that's the next challenge for me. I think once I've been able to work that, things should become a lot easier. I mean, look at this. We have this spike, which was the FOMC rejection. And then we've now had this channel. 1, 2, 3. And then we had a break, measured move, maybe. You know, it's all there. It's, you know, it looks very straightforward. It doesn't look as complicated. I remember seeing this bull flag, and you knew you were going to get this on some day. It's not as complicated. So why then are we making it complicated? Or why is it hard? And I think it's just because maybe it's just really understanding. I mean, I'll give you an example now. Let's put this back on the, I mean, you look at this chart. Where's your stop? The day opens here. Where do you put your stop? Here? Let's see, for instance, now let's say we put our stop there, right? This low. Let's see what it looks like on the RT, on the ETH, because that is really the chart that tells you everything. So the previous day level, okay, the market opens here. That level was, in fact, let's mark it out so we understand what we're doing, because I'm worried that we say we want to put our stop here, right? We're going to put a marker there. Let's just use this. All right, so that is where we put our stop. Now, if we go on the ETH, is it a valid stop? That was, this was the day. Oh, it's moved the line. Oh, there it is. Is this right? Oh, it went down, went back up. Oh, this is yes. All right, so this level is not what I want. So, but let's see. But I guess this is still a good area to put your stop. Let's go back onto the chart. Okay, so this is 2 days. All right, so that was still an okay place to put your stops. Okay, that's fine, right? You can open up here or even come down here. Your stop is now here because you made a new high. So that holds your stop. Now, this day, where'd you put your stop? Here, right? Does your stop go here? Well, let's see, because this is this high. So, because that is actually the biggest challenge. It's about where you place your stop. And I think if you can figure out where you place your stop, it makes it easier to make trading decisions. All right, so the second day, this is the next day, which was today. It's a valid place for a stop. It is a very valid place for a stop. I mean, this is that, the breakout was here. This is where you're putting your stop. It's kind of above the breakout. It's probably not a great place to put your stop. Really, this is where you want to put your stop. But then the market opens with this bear bar here. You would typically put your stop here, but really you want to put your stop here. Why? Why is that important? Because if your stop gets hit then it means you're no longer in a bull trend, or at least it means that you're in a trading range at that point. So when you get in long here, your stop is all the way down here. That's a lot of points. A lot of points. You know, for whatever reason you go in long here, 27 points. So what do? Do you just hold for how many points you want? What do you want, 27? Do you hold for a measured move of 27? And these are the things that make it difficult to trade this. You have to remember that because of the position of your stop, you have to trade smaller. You got to wait for pullbacks. You get this wedge bottom. Do you wait? Do you get out here, wait for wedge bottom, enter again? Now where'd you put your stop? Here? Technically your stop should be here. It shouldn't be here. I mean, I normally put my stop here, but really it should be here. And then you take this up. It didn't take another high out, so it could still get hit. It didn't here. And then at this point you could reach your stop here. That is how you trade these trends. But they take a big psychological push out of you. So you have to be very comfortable holding through these pullbacks. And that's why I say trends are difficult, because you have to hold through these pullbacks. But yeah, otherwise everything is clear. Everything is clear. The wedges all work. They all tell you where the price is most likely to turn around. They give you an indication of levels you should aim for. So this level you can aim for down there, and so on and so forth. All right, so that is my recap for the Friday. Like I said, it was I decided to stop trading because, you know, I know what I'm like. I thought I'd overcome the psychological barriers of trading the day, and some of them are very, very tough, because, you know, I would get in and out of a trade without really thinking about what I'm doing. This was my I pasted this on my Instagram. This was my recap in terms of understanding what's been happening in the day and writing out how I would have made some decisions. All right.